Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I have Garrett Nann with me today. Garrett is a real estate investor located in New Jersey, but owns all of his properties except one outside the state. So he's like me. We were talking about it. I'm in California. I have never invested. I have invested once in California, but mostly 99% of the time it's out of the state. So he bought his first property in Huntsville, Alabama 5 years ago and continued to buy until that market exploded. So then he started building a team in Pittsburgh area and has scaled up to 110 units total. So I think this would be a great episode for people who are sitting on the sidelines because their home market, their own backyard is too expensive. And right now every market is expensive if you compare it. But again, just looking at the ROI, most of the markets like New Jersey, California, Arizona, they just don't make sense. So you got to think about out of state, but a lot of people just sit on the sidelines waiting for the right opportunity. So I am looking forward to this episode. I want to peel some onions here. So welcome, Garrett.
Hey, thanks for having me on. Appreciate it.
Absolutely. So first question we ask everyone, tell us something funny or interesting about yourself.
All right. So one thing interesting that, my little claim to fame is I used to work for Chipotle a long time ago.
Chipotle, huh?
Yeah. and my Chipotle was selected to be the location that cooked for the Yankees after every home game.
Whoa.
So in 2012, I cooked Chipotle food in the Yankee clubhouse for an entire season after every home game and met all the players and all the old timers. And it was a great time. So that's my little claim to fame, interesting thing that I try to drop into a lot of conversations.
That's awesome. But did you make sure to take autograph from everyone on that burrito bowl or the burrito?
It was specifically said on the first day, oh, by the way, don't you dare ask anyone for an autograph or anything. Like, cook the food, serve the food, chit chat, clean it up and leave.
Get out.
If you're cool, we'll be cool with you. I got a haircut. They got a pool back there.
Oh,
we got a barber shop. So I got to use all the facilities, which was really cool.
But no autographs, so you can't sell anything on the market.
No. I didn't do any autographs, and I don't think I had a smartphone yet. So I think there's only one picture that could actually prove that I did this.
No, it's great. It's the experience, right? The experience matters.
Yeah, it was interesting.
I think right now we live in such a social media world that we want to prove to others that we did this thing. I am at the airport. Sure. I'm eating at the blah, blah, blah. Who cares?
Yeah, really. Right? Who cares?
Yes,
I know I was there.
Experience matters, right?
Yeah, the experience. We were VIPs. We showed up with free Chipotle cards. The people loved us. We walked through, doors opened, and we just handed out free burrito cards. We were total VIPs, and it was awesome.
Oh, that's awesome, man. So how did you, from Chipotle, that's a great story, by the way. How did you get started with real estate?
Well, I actually got started with real estate initially. So I had a couple of starts and stops. I got started when I was 18. The very first credit card purchase I ever made was the Carlton Sheets, no money down real estate course.
Nice.
And he ran an infomercial at night.
Right.
And I bought it. I went through it, did 500 cold calls and failed on every single one of them when I was 18. So that was my start in real estate. And I kept that course until the day I bought my first property. I said, my first credit card purchase is not going to go to waste. And it wasn't until 15 years later that I actually bought my first property. So I've been in real estate since I was 18, wanting to do it, but never actually pulled the trigger until about 15, 16 years later.
Wow. So I have two questions about that. Why did it take you so long?
Man, I could do a 10-hour podcast on that question alone.
Just a minute.
In just a minute. I had a really good job right when I was 20 years old, and I just went with that job and just started a career and kind of put everything to the side.
I think things get in the way, right? And then
had a house, got married, did all that stuff.
And But I'm glad that you got back after 15 years. So second question I have is that if that book was given to you for free, would you have taken an action?
No.
Right?
No. If I got that book for free, I probably never would have made the first cold call.
Yeah. Or maybe you wouldn't have even finished half of it.
I mean, I got cursed out so much when I was 18. Like it was actually a great experience to get cursed out as much as I did back then. Because now it doesn't. Now it's right after that it just duck off of water. Like you don't even know.
You don't even listen to it, right?
What did that guy say? Oh, all right, yeah.
No, so what was your very first real estate investment then? Other than, of course, you bought your primary house, but as an investment property.
So my real estate partner and I, he runs a business and I run another business, and we were just working together one day in an office. We decided to meet up, and he was into real estate for a long time. I had always been into it. I now had friends that were involved in it, doing wholesale deals and things like that. And we were in a conversation with someone about North Alabama. And it just so happened that we knew someone who lived in the Huntsville area. And we just said, it's time. It's time I don't care if I lose all this money at this point. Like, I just don't care anymore. I have to do this. We have to try this. And we made that first purchase out in Huntsville, small single family ranch house, bought it with cash, didn't refinance it. No idea what we were doing.
Right.
But we just did it. And that was the first purchase we made.
That's great. So, and I love Alabama market. By the way, I still own my property in Birmingham, Alabama. And
nice.
I bought it about 5 years ago, about the same time, 2017. And I was looking at Huntsville and Montgomery both at that time. And you got it at the right time in that market.
Yeah, Huntsville, this week, Huntsville, I think in the World News and Report magazine, whatever that magazine is, that puts out the lists of cities. The best city to live in the United States is Huntsville, Alabama this year.
No way. Okay, I got to check it out. So how did that investment work out for you? Do you still own it? What happened?
We don't own that one anymore, but what that investment did was made us realize it was possible, right? That first step forward made us realize it was possible. It wasn't the greatest purchase we ever made, but it was the best in the sense of we bought one, someone sent us a rent check, and the process got started, and then just started figuring out how can we duplicate, how can we go from 1 to 2, 2 to 4, 4 to 8. And we don't own that property anymore because the neighborhood exploded, and we got a ridiculous offer.
Yeah. Why not?
So we said, all right, yeah. We don't like selling them, but we sold that one because it was, too good to be true type situation.
Oh, that's
like,
awesome.
Are you sure? I actually asked the guy, he's like, are you sure? I was like, all right, man, we'll sell it to you. No problem.
Right. So one thing you mentioned is it's pretty good that it wasn't like a crazy good deal when you bought it, but you still went with it and it worked out really well. A lot of newbies or a lot of beginner investors, they want to hit a home run, right? They want to copy you and I, and then they wait forever, right? You should not be waiting forever. Find that deal, because that deal doesn't have to be a home run. It doesn't have to be a blockbuster, but it will teach you a lot of things. There'll be tons of lessons throughout that deal. My first deal was a dud. Actually, I lost every penny I put in it.
Okay.
Right. So I learned a lot from it, and I continued. I said, okay, I'm not gonna back off. I know this works. I know a lot of billionaires were made from real estate. I got to just, stay focused. So
Yeah, absolutely. My whole life, I just used the mindset. If one person can do it, then anybody can do it.
exactly.
There's just something I'm not seeing or understanding, but I'll find out what that is.
So now let's talk about out of state. Why did you choose to invest out of state? Because even at that time, New Jersey wasn't, going up like crazy. Even now, it doesn't appreciate a lot. So,
Yeah.
why out of state?
I'm in New Jersey. At the time I was living in a townhouse. The taxes were $8,000. Property taxes was $8,000 for my townhouse. No property, no nothing. When we went down to Huntsville, I mean, there were 4-unit quadplexes that were being sold for 60,000. Like people were trying to give you a four. Now that same fourplex today sells for 350.
Whoa.
But 60 to 80,000, people are just trying to give them away. And that didn't take much mathematical calculation to say, wow, well, 600, 700, some of these were getting $800 a unit.
Right.
You're grossing $3,000 a month on an all-in 120,000 after rehab.
Yeah, you may even get your money back in 3-4 years.
Yeah, that's like a unicorn purchase. I mean, it was just we got there at just the end of the discovery of Huntsville, right before it exploded us, people like us out of the market. But we were able to. It didn't take much to see what was going on there, and just talking with some people, saying like, "Wow, we can make a lot of money, cash flow wise, quickly than a market like New Jersey."
Oh, that's great. So how are you picking the markets to invest in, or what did you do at that time to pick the markets?
Well, at that time, it was just, I don't want to call it a fluke, but it was a referral. It was, we were in a conversation and someone was talking about it, and we just kind of took mental notes. So that was, like turning 21, you go play blackjack, you seem to hit all the time. So we got a little bit lucky at first with that conversation, but going forward, we're looking for strong cash flow markets with not a lot of appreciation potential, because that just really lowers the window on how quickly you can build a portfolio. Huntsville, we were not there very long before the prices doubled and tripled, where buyers like us couldn't compete. So our markets that we look for, that we try to open up, are good cash flow markets, that reasonable appreciation. Nothing. We're not looking for hot markets, and and good employment. Hospitals and some technology, and maybe a university area, and closest metro, things like that.
So what steps did you take before buying your first property out of state, and how has that changed now? What have you learned, and now what kind of steps do you have?
Yeah, so the first step was we just went there for a couple of days.
Okay.
Not a lot of scientific evidence went into buying that first house, but now we're going out there. We're going out to a new market in a couple of weeks. We're going to meet with a variety of agents, meet with general contractors, meet with every single person that could possibly be on your team is crucial before you buy in an out-of-state market. And just setting up that process, setting up interviews, and just kind of understanding the type of personalities you want to work with, because the real estate business will present you with a wealth of personalities on a daily basis.
I agree. And what kind of processes did you set up to scale up real estate business out of state?
For sure. So that's
you went from 110 units now. So,
So we're buying a house every week. We're going to contract every week now, and a big part of that is the process. So to get granular with it, I block 2 hours a day every day to look at properties and make offers. So first part of the process is I am making offers every single day. Okay. 7 days a week, I am sending in offers. And, the process goes to our agent. They, just putting in the offers. We put contingencies on there for just a contractor inspection. Then it comes back to us. We get renovation budgets. We approve everything. It's just little checklist stuff along the way. But the first part of it is everything. We make offers every single day on properties.
And so offers every single day, but how are you getting those properties? You build the relationship, and do you have a team who looks at performs the due diligence, or it's you or your
Yes.
partner?
Yeah, so we have a team. We have an agent. We have a general contractor, title company. I mean, we're not going out and seeing these properties. We have a photo list of about 100 photos that we like to see. And so as soon as we put an offer on, our offer is accepted. We have 14 days to get the photos, the rest of the photos, the contractor inspection, and the rehab. So there's a team in place that does that.
And how did you build that team?
So we started going out to the Pittsburgh area, just
Okay.
meeting with people, made ourselves very available, just being reasonable, being approachable, and just building that relationship so that an agent, because that's how we like to buy through agents, is willing to put in 25 to 30 offers a week to try to get one to two accepted. So just a lot of time on the phone. I talk to our agent every day. I talk to our contractors every day. I talk to our title guy 3 times a week. We talk to our insurance guy every week. And just being a good business owner, being a good steward of your business is the best way to approach out-of-state investing. Just taking ownership of every step of the way.
And how many times do you have to visit, let's say, Pittsburgh? If you are putting offer every week, do you go every month, every week? How do you manage
So
the existing properties as well as maybe the properties in pipeline?
Yeah, so we're going out to Pittsburgh 3 times a year. Every 3 to 4 months we head out that way. Alabama is once a year. We're actually going next week. Next week I'll be in Alabama for a whole week. And then we also own in multiple Pennsylvania markets. So every 3 to 4 months, we take just a little lap around the stuff that's close to us that we can actually get to, drive to, and be reasonable. And then Alabama, we're going out once a year.
And are these agents looking at only on-market properties, or do you also get off-market?
We also get off-market. I would say it's 7 out of 10 are on market and 3 are off market. So a couple of the agents we work with also have a decent pipeline of off market properties.
And is it because you have built pretty good relationship with those agents?
Yeah, here's what agents care about: that you can close on your deals, right? Offers are one thing.
Get paid. They get paid.
I can make 100 offers. If I never close on anything, then it doesn't matter. So over time, we've proven that we close 100% of the deals. We get the contract, but barring the contingency. If the contingency clears, we have a 100% close rate, and I would say at least 1 out of 10 deals we get is from someone who didn't close. We bought one 2 weeks ago. An agent called us up and said, I'm supposed to close tomorrow on this property. This is right in your buy box. She knows what our buy box is. She knows what we're looking for. She knows the neighborhoods. Can you close this tomorrow? And yes, we can close this tomorrow. So nice. I think that having the ability to, we have a 100% close rate really elevates our status amongst agents, because they lose a lot of deals at the closing table. They lose
I agree. So one, of course, they don't make money, right? Second, they also lose reputation.
Well, that's a big
buyer
thing.
Does not close, right?
Yeah, because the reality is we're putting in, not every offer is a low ball. Some offers are asking price, but the reality is we're putting in a lot of offers that I don't look at them as low ball. It's what our calculator spits out at the bottom. Like, that's the number.
Yeah.
And you got to be able to close on those, and you got to have an agent who's willing to do that and put in those offers and know that you're actually going to close them. If I put in 30 offers and 20 people say yes, that could be a problem if, the
Yes.
agent's saying, how are you going to close this? But
Yep.
we close them all.
Oh, that's great. So one more question: how are you using your own underwriting tool, or did you buy it through a group and then pretty much customize it? What kind of underwriting do you do?
So it's just I took a course on how to create good Excel calculators. I took a couple courses on that. And I just create my own. I have my own underwriting calculator for the exit strategy. So there's
Okay.
a short-term rental calculator, we do some rent to own. There's every type of exit strategy has its own calculator, and I'm just plugging in some numbers and looking at what it spits out, and then doing a little Google Maps driving around. And the underwriting process in the beginning, once you really start knowing the market, is really quick. I know within a couple of minutes if I'm going to put an offer in or want to buy this house.
No, that's great. So one thing you mentioned that you are focused on cash flow, right? What kind of return are you looking at? Is it, from cash flow perspective?
Well, from like a cash on cash perspective, our returns are infinite because we're all the way out of the deals. I mean, we're doing everything with private lenders. I mean, we're very little money is into our deals. We just refinanced 3 houses into one portfolio. I think, we're coming to the table with like $4,000 for 3 houses, fully renovated, now rented, the BRRRR strategy, which
Yep.
is the only real estate strategy there is. I mean, that's, you got to get the cash back unless you're super.
Especially if you are in single family world. Yeah, you got to get the cash out.
Yeah. 1 to 4 family, all works well. And yeah.
So what do you look for in rent to price ratio, or is there a number? Or
we're looking to be $300 minimum on the net of a rental. That's the minimum. If it starts getting close to that dollar amount, then you have to really, from our business model, really make sure that there's not a big amount of cash left in. If you want to pick up a short-term rental where you're making $1,500 net a month, well, 25,000 leaving in that to recoup that over 2 years is fine. I mean, that's a great business. You ask any entrepreneur in the world, hey, if you can get all your money back in 2 years, is that good? And they'd say, sign me up for that business right now.
And then it's an infinite return.
Yeah.
So that is after refinancing.
Yes,
that's what you are saying. So when you are putting everything in the calculator, you are making sure that after renovation, this property would rent for this much, and we'll pull most of the equity out if possible. And that's when it should be like $300 per month.
On the minimum side, for certain neighborhoods, and then we start creeping up in the 400 or 500 on single families. And we've got a lot of multifamilies that just blow that number out of the water.
Oh yeah.
But that's kind of the threshold of where we're at, because we want to accumulate assets. If it's a really good asset in a good neighborhood, then we will make some exceptions on that. But that's about the threshold.
Oh, that's awesome. So which markets are you focused on right now, and why?
So Pittsburgh Metro is our main focus. And interestingly enough, Pittsburgh, in another magazine, was just named the most affordable metro area to live in. And whether it is or it isn't, it's affordable for investors. And it's just a great area. It's got all the sports teams. It has industry. It's got surrounding metro areas that are good. We really like that area. Houses are older and inexpensive, and if you got a good team, everything is, you can get your money back on most houses out there.
That's awesome. So I'm going to throw a curveball, because I see right behind you, I see a crystal ball. So if you can take that out, if you can take that out and tell us, what do you think of the current state of the market? What's coming?
Yeah, like I get that a lot, and no one knows what's coming. What I do know is that I am getting deals for less now than I did 6 months ago. And there's still minimal amount of inventory. So there's that fear factor that sellers have right now in my market that they probably don't really need to have. But when you watch a little bit too much news, maybe you might be believing a little bit of the hype. There's still not a lot of inventory, but in the last couple of weeks, we've had offers accepted that were significantly lower than they were 6 months ago.
Yeah, it's changing, I can tell.
Yeah, and the rents are solid. You know, the rents
actually
are
rents
really
are
good.
going up. So
Yeah, rents are going up. Our last round of rentals that we just finished rented for above our expectations from when we bought it, and they appraised at the expectations, and we bought them for a lot less.
Nice.
And I think there will be a slowdown. I mean, that's natural, but
yes, it's supposed to happen. It's bound to
I mean,
happen.
you can't be in the real estate game and think that there's not a cycle of
in stocks or real estate or cryptos, there will always be a cycle. But if you are in it for long term, you'll be fine.
That's why, hey, kids out there, start when you're 18. Don't wait 18 years to buy a property. Put 10 grand in an IRA or a money market. It'll be worth like $1 million in 40 years.
Yeah, no, I already did that for both of them. So
so I think the market will be busy still. I think it's going to be busy. I think that it's if you're picking up great assets and you're tightening your belt a little bit on the types of houses you want to buy, that's all we're doing. We're just tightening up on our buy box a little bit and taking 10% off our normal offer, and it'll be fine.
Nice. What has been your best deal so far?
All right, so we've got a lot of them, but the best deal, because I asked my business partner this. I say, what do you think our best deal is, and see if we had the same thought on it. It's an Airbnb that we're just finishing our rehab now. It was a seller finance, so we didn't have to come to the table with any money whatsoever.
Nice.
Said, I just get this house out of my life. So we seller financed it at a absurd price. I mean, it was basically a tear down. It's a 6-figure rehab, and we have the nicest house for short-term rental in like a 50-mile radius. This thing is going.
Because if you tear it down.
I mean, and you know, we over renovate. People always tell us we're over renovators. You know, we will put marble in. We will buy, you know, large amounts of better product and hold on to it. We have very high ownership pride, and we want our contractors. This is one thing people forget about in the real estate. Contractors don't want to do crappy work for you. Everyone wants pride.
They're going to showcase, right? They need referral. They will showcase all your properties.
Contractors love working for us. We're reasonable people, and we want it to be done well. I want the little bit better lights. I want the little bit better countertops. I want a better toilet. I want new toilet. I want all those things for our tenants. So the contractor has pride putting it in. I have pride in ownership. And our tenants have pride in their place that they live as well.
So how much did you put in for the renovation, and what is it earning right now?
So it's not on Airbnb yet. The rehab is just finishing it. So we got it at 32.5, which is ridiculous.
And then you didn't pay for it.
I didn't pay any money for it. And we put the owner on a 15% interest on this purchase of the house. We put in $150,000 into this house.
Not bad.
And it is there's nothing we haven't thought of. It is 5-star all the way through. We'll probably get a 300 plus on the ARV and be able on our refi, be able to actually reduce our loan to value and get a better interest rate.
And pay off the seller if you need to.
Everyone's going to get cashed out. We had private lenders finance the rehab for us. We had the guy who owned the house finance the purchase of the house. And we just had a lot of fun building it. So it's definitely the best deal that we've done. It's going to make net a couple thousand a month for a really long time.
So, and I know that we will always have some educational experiences, right? So what has been your worst deal so far, and what did you learn from it?
Oh, that's so I got 2 worst deals. So I'm going to just cover them both real quick because they're different things. So the first worst deal was a flip. It was our second flip, and we lost money on it, and we got talked out of doing a bunch of rehabs that we wanted to do. We didn't know the market well, and we left things in the house. And I used to have my license back then, and I was the one selling the flip as well, and having people come in and just kind of tear it apart. And we sold it for less. Then we got killed on the crawl space during an inspection that we didn't check. It was our second flip. Didn't even think to get any of that done. It was an REO property from a bank, and just disaster. So the huge learning lesson there was go with your gut, do your research. If we had rehabbed what we wanted to do versus what we were kind of sold into doing for the flip, I think it would have had a much better outcome. The other disaster deal was we bought a 4-unit at an absurd price in Pennsylvania, and it ended up being completely metered on 1 meter, everything. And it came out of R, and we kind of missed that on the due diligence. So we don't make much money on that property. It's a great property, and the quote we got was $48,000 to split the utilities, which we're not going to do. And not a terrible deal, but a big learning lesson. Now, when we make multifamily offers every single time since that date, we find out the utilities. If they're not separated,
I learned that as well, that all those triplex and quadplexes, they always have 1 meter. And
and in Alabama, Alabama wasn't a big deal. You always paid water as the landlord. That was like a law there. It's a thing. In PA, they didn't really have that, and we kind of missed that on during the due diligence. And we don't lose money on the property, but you get excited when you buy things. You're like, wow, we're gonna make this much money. And then we started getting the utility bills that we're not gonna make anymore. This much money.
That's exactly what happened with me in my first property. Even it was single family, and I didn't know the previous tenant had signed the lease where it said that landlord covers the water and sewer. And the water and sewer, you would think that it would be maybe $200 a month. This guy has a leak. He wouldn't even let us in. And the water and sewer was running more than the rent.
Yes.
More than the rent every month.
We just fixed their leak in that same
So I was covering the cost every month. He would pay me $700 and I pay $1,000 for water and sewer. And I'm like, what?
That's this house. If you're buying multifamilies, this will happen to you at probably once. But if you're watching this, get the utilities on a contingency. And also, we must see the bill now.
Yeah.
Like you got to show me.
I learned that the hard way.
And there's people saying, how could you buy a multifamily without knowing this? In this market, you buy first, and just missed that little piece of due diligence, but we don't lose money on it. It's just not a great a purchase as it first looked.
So thank you for sharing all these golden nuggets. Let's take a quick break, and after the break, we'll go through the same questions I ask every guest.
All right.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Garrett shared a lot of information regarding out-of-state investing. Thank you, Garrett, for that. Absolutely. Are you ready for 5 round?
Let's go.
Would you be changing any business or investment strategy after this pandemic is over? And I think we are pretty close, but you never know.
Just doubling down on my efforts, just realizing I need to buy way more, be way more active, and go for my goals a lot faster than I was.
And you mentioned about a book which you bought around when you were 18. Favorite real estate or investing book for right now?
All right. So I would say my favorite investing book is The Millionaire Next Door. It doesn't get much excitement, but man, does it break down the true millionaires. Millionaires are not the people we see on TV. They're not the people on social media. It's the guy that lives next door to you. Yeah. And understanding that was a huge mindset shift for me when I first read that book. So the second book, though, that I will say everyone should get on their bookshelves is a book called Extreme Ownership.
Oh, that's an awesome book. My favorite.
Yeah.
I have it right here.
Yeah, exactly. And in real estate, it happened to us last week. A painter painted the wall a color that was like, where did you get that color from? So, well, you never sent the color. It's not that exactly. It's not that guy's fault that he chose the color. It's our fault. That is, you have to take extreme ownership in the real estate game. It is your fault if something happens.
For running any kind of business, I think.
Any kind of business, absolutely.
You got to take ownership, otherwise you will not go nowhere.
Yeah, absolutely. You've got to be, the buck stops with you in all scenarios, and that book really creates that mindset well for you.
Any tool or website you recommend or you cannot live without?
Ooh. In our business, I cannot live without two pieces of software. One of them is a software called Invest Next.
Okay.
That
I know.
Yeah, tracks if you're using private lenders, you need to track that, and that needs to be readily available for them to look at. I know a lot of guys who do it on an Excel sheet. So Invest Next actually customized a platform for us specifically because it's more for syndications.
Right. Yeah, I
cannot
use
live without
Syndication
that.
Pro for my capital raising.
Yeah, cannot live without Invest Next because investors call us, hey, how much money do I have with you? What's my interest rate? They don't know. They're busy people, and I'm in 2 clicks, I'm in their account. Also Asana. Asana is when you're I mean, you put that app on your phone and you can just easily add to that to-do list and tag staff members, tag your business partner or whatever. Because when you're in the game and you're in the entrepreneur world, it's 24/7. You might not work all the time, but you're on call all the time, especially with your brain. So you need a good tool to keep organized, and Asana is phenomenal.
No, that's awesome. Any advice for beginner investors?
My advice to there's every piece of advice is important, but the best piece of advice that I can give is the mistake that I made, and that is to get started. Do not wait. Get going. Throw yourself into the fire. Immerse yourself in what you want to do with your life, your dreams, and just get started. The only regret that I have in my life is that I didn't start pursuing this much sooner, because I love it. I'm good at it, and it doesn't feel like I work anymore. Even though I work all the time, it's just a good time. So I wish I did it 20 years prior.
That's awesome. How do you give back?
I get a lot of calls from investors. I talk with a lot of people in real estate, and I give back just my wealth of experience and knowledge. So we have a small little mastermind of friends and family members, and some of our private lenders. We have some private lenders that still want to buy real estate, and we give back to the real estate community as best we can for our family and friends to start growing some wealth and income through real estate. And that's important for us. We want to see our network of people, rising tides raise all ships, right? And that's a big thing for us.
That's awesome. How can my listeners reach out to you?
All right. Well, our company is called National Property Group, and at nationalpropertygroup.com, I would encourage anyone to just follow our newsletter. Every month we put out deals that we got. It's just a nice little inside look at a active, growing real estate company, and all our socials are on there, email and I'm on Instagram mostly than all the other ones, but through our website, signing up for the newsletter, give us a call, shoot me an email, nationalpropertygroup.com.
Thank you, Garrett, for your time.
Hey, thank you very much.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.